This market isn't hiding how it feels. Strength is concentrated, weakness is exposed, and every rally is tested as soon as it starts. When buyers defend clean support, you can see it. When they don't, the charts tell the truth quickly. Today we'll separate what's truly strong from what's simply moving and set a plan that protects capital and keeps us aligned with real accumulation. Welcome to Market Edge, ahead of the trade. My name is Owen Larson. It's good to have you here. Today we're breaking down the ETF landscape, the rotation shaping this week's moves, the key lesson every trader should carry forward, and the leadership signals inside the max list. We'll start with the ETFs, move into the educational segment, and then turn to Pat Walker for the full max list review.
It's good to know what to look into to maybe buy, and it's just as good to know stuff to stay away from. That's what we teach. It works. We're looking at Direxion Energy Bull, Energy ETF. The weekly chart on the left, daily on the right, as I said, and it's basing here. Needs to take out these tops across here with volume, ERX. Something to watch going forward. But note, there's quite a bit of overhead supply on the weekly chart. Okay, be aware of that on ERX. It's going to need good price action, good volume action, and a good market. There we go. IBD 50. Boy, this is talking. Look at that thing drop. IBD 50, great proxy of leading growth stocks. And it's not looking so good here. What does that tell us? It's not just, oh, be careful with the IBD 50. Be careful with the market. That's good to know. That's knowledge power, investing power. It's good to know what to look for to buy. It's good to know what to look for to avoid. And we teach both. Let's continue onwards here. Gold miners started to pick up. We own gold miners from down lower. This is why I love weekly charts. Look at that base breakout, folks. 55 to 85, almost 85. That's good money. That's good money. Yes, it's owned. Now, it's got sloppier here. Nothing really to do with it unless, and I'm going to draw this to help you, slight downward sloping trend line. What catches your eyes? Well, it lifted up on fairly heavy volume here, and then on this bar, it gapped down and reversed and closed to near the highs of the day. It needs to take out this top here with volume, GDX. And that's a more aggressive setup. Why? It's kind of loose. Wide and loose here. Be aware of that. Let's continue onward. GLD. Now that one looks pretty good. Look at the weekly base breakouts here and here. GLD, it's been owned. And that is 320 to almost 320 to 400. Yeah, this was on the key list for buy. But note, the important thing is this. Note the base. Here's the weekly base. There's the daily base. Look at this. And as it breaks out, look at the volume steadily rising. What is that telling us? And this is a great tactic. We use MissionWinners. I've done this for years like this. People talk with their mouths and vote with their pocketbooks. I want to go where they're voting. How is that voting represented? By increasing price action, backed by increasing buying volume. They bought it. They were buying it. They were buying more of it. And that is a good move. And that's what we're after. In fact, that is from here. That's a great move. There we go. Let's move on. Oh, take it a step further. If this could base, just want to handle this for you. You see these tops across here. If this could maybe base for a day or two longer and then take out these tops, that could be a potential buy. There you go. Just trying to give you the full disclosure on what we do. Cybersecurity, yeah, that's been hacked. Leave it alone. I had to say that. I'm sorry. Biotechnology's been trending very nicely. Look at that. Look at the weekly base breakout. Note the volume when it pushed through those tops. That's what we teach at MissionWinners. That's what we do. Online retail, sloppy here. It's below the falling 50-day. Really nothing to do with it. Leave it alone for right now. IGV, software technology. Look at this thing, the way it's been dropping here. Okay? Tells you what? Be careful with software stocks. That's good to know. It's good to know what to look for and things to stay away from. Opposite sides of the same coin. IHI lifted up on the weekly right here. But notice when it broke out. And these are great lessons here. It breaks out. Oh boy, look at that. That's great. How was the volume on that bar? It was less than these bars. The volume dropped off. There was no real commitment for people buying it or institutions. And then what's it do? The next bar drops right back down on heavier selling volume than buying volume. That's the work we do at Mission Winners, showing people what to look for and what to do. Feel this shows some power? Be careful with medical. Doesn't look bad on the weekly though, but it needs to get back above this line on both the daily and the weekly. There you go. Mid cap. That's pretty dang sloppy in my book. Look at the weekly, and then look at that daily dropping. Large drops. Be careful with mid cap stocks. Move on. Aerospace and defense. Be careful with aerospace and defense. Home construction. Hard downtrend. You can just see it. Leave it alone. This is very important. This will help you. Focus on strength. Strength begets strength. Someday this will be good again. But right now, no. Let's narrow our focus on opportunities that provide the best situations for making money. That's what we do in Mission Winners. That's what we're looking for. Folks, I'm very pragmatic. We have a limited amount of money. We have a limited amount of time. Let's use both wisely. Here we go. Small cap, our S&P 500 growth, kind of choppy here. I mean, look, it was trending nicely. Gets real whippy. These wide range bars indicate high investor emotions. Be careful with high investor emotions represented in the charts. You get caught on the wrong side, you get what's called a haircut. We don't want that. IWM, it's pretty much in a downtrend right now with small caps. Be careful until it shows power over the 50-day. Real estate, pretty sloppy. Be careful with real estate. Transportation runs up and comes right back down till it takes out these tops on the weekly and or the daily. Leave it alone. But it's whipping around here. That tells you lack of commitment. Oh, it's going. Oh, I guess it's not. Boom, like that. Just stay away from it. Wide and loose charts, as I've stated, indicate high investor emotions. High emotions and good decision-making are mutually exclusive, not just in the realm of investing, but in all facets of life. There we go. Airlines, pretty choppy here. Be careful with airlines. Banks, it's below the fallen 50-day. Till it gets above the 50-day, leave it alone. This rally is right up to the regional banks. Look at that. Check this out. S&P 500 banks, right up to the falling 50-day and backs off. Regional banks rallies right up to the 50-day and backs off. Two instances right there. And literally, if I wasn't talking, it'd take you literally 2 to 3 seconds to look at both of them combined. Stay away from the banks. Done. You don't have to think it. Don't overthink it. Isn't that great? I love it. MDY, small cap or mid cap, that ain't so good. Be careful with the mid caps. Oil services, that one doesn't look too bad. Needs to push through that line. I already put it there. Needs to push through that line, but it needs to push through with volume and a good market. You need that. Pharmaceuticals, look at that nice base right there. And then a good break. What does that tell you? And what did it tell you? Hey, maybe look into some pharmaceutical stocks. Isn't that great to know? That's me. It just, the chart told us. We didn't have to forecast. I mean, it's like, oh, it's just kind of going sideways here. I guess if it takes out those tops, I can look at that or maybe some stocks. Oh, what is a big pharmaceutical stock that's probably doing pretty well? Some of you probably know it. What's a little company called Lilly, LLY? There you go. Just combining the foundations. QLD, gap down, has support on the 50-day, okay, on a pickup in volume. That's something to watch going forward. But no, it's kind of loose here. High emotions in that chart. Just be a little cautious with it. Same thing's true with QQQ, RTH. There's nothing really to do with retail. Cloud computing, looks like it's raining for me. I'm sorry I had to say it. Silver, it's hanging in fine, but it dropped fairly hard on Friday. It's kind of loose right now. Be cautious with that until it takes out these tops. And I'll draw this to help you. Take out these tops with volume, but it's pretty loose here. Look at this. It rallies up. That's a pretty big drop there, folks. Okay? Be cautious with that. Loose patterns indicate, as I stated before, high investor emotions. You don't want that. High emotions clouds judgment in all realms of life. Okay? Steel's basing right here. Good bounce on steel on Friday. Look at that. Steel ETF. Maybe that's something to look into going forward. SLX. There you go. I'm not saying buy it here, but if it starts to take out to Friday's highs with volume, That might be a candidate. There we go. But it is not a base breakout. The base breakout's up here. If you buy it here, it's riskier. How do you lessen risk? If you buy, you go smaller. There you go. SMH, same situation. Lifting off here, get a bounce. What catches our eyes? It did bounce off the 50-day with a slight pickup in volume. But it's kind of loose too. Be careful with that. There's overhead supply there. Just pointing that out. We're about done here, by the way. I did that and I didn't want to, and I'm sorry. And we're back. Let's move on. Here we go. A semiconductor ETF, another one, nothing there. Spiders, kind of loose here, folks. Be careful with the S&P 500. Did find support on the 50-day, but it needs to show some power going up here. Also note, it was rallying up on decreasing volume. I was telling the team, hey, were we doing a lot of buying into this? No, we weren't. There wasn't much power, and there were many stocks lifting up, so you just leave it alone. Same thing's true with SSO. Solar, support here, but it's pretty loose, folks. Be careful with that. And again, not being negative or bearish. I'm just trying to help. We're about down here. Small caps. Look at that. Now, this is leverage. This is a leverage one. What do you see here? You know what that tells me? To me, that's a very powerful lesson right here. Stay away from the small caps right now. Isn't that great to know? Think of the number of stocks you eliminated from your search. It forces you to focus on the best of the best. I love that. I don't want to look at a million charts. Uranium, nothing going on there. Leave it alone. Oil, lagging. Leave it alone. Aerospace and defense, lagging. I mean, look, it's below the fallen 50-day. Just leave it alone. You know what I love about that? How easy it is to see, how quickly it is to reach a decision. And it's not that we're trying to fly through this to get it done. It's just time is a very valuable commodity. Let's use it wisely. That helps us. Biotech, now there's another biotech. Doesn't look too bad, but it did fall in fairly heavy volume. A little loose up here. Just be careful there. All right. Home builders, no, they're not building. Materials, really not much power there. Leave it alone. Communications, kind of like a Led Zeppelin song, communications breakdown. Okay, some of you go, what the heck's he talking about? But some of you are probably smiling, going, hey, that was pretty dang good. I saw them at the height of their career. Here we go. Nothing to do with it. Jimmy Page could play a guitar. XLE, basing nicely here, energy related. Notice this. You got a little shelf right here, up on heavy volume, something to watch going forward, or it's select energy stocks. How about that? XLF, nothing to do with it. Financials, be careful with that. Industrials, be careful with industrials. Technology, well, it's showing some strength here. Look at that. It found support off the 50-day. Oh, technology, great growth sector. Something to watch going forward. We're about done here. Consumer staples, it's below the fallen 50-day, and it has been for a while. Just leave it alone. It tells you not just to leave the ETF alone. Be careful with consumer staple stocks. Utilities, kind of basing here, okay? Get a lift off the 50-day, possibly. More of a defensive sector, okay? When things get weird, sloppy, money can go into a safer area. Utility, where you can collect a dividend. There we go. Healthcare. How would you describe healthcare? It's kind of a defensive sector, isn't it? Yeah, I mean, there's a lot of things we don't need, right? But yeah, healthcare, that's pretty mandatory for life. And look what it's doing. It's a defensive sector. And look what it's done here. Now, there's really nothing to do with it now, but maybe it's going to base out and lend itself to an opportunity fairly soon. We're about done. Consumer discretionary. Look at this. This, folks, healthcare. You got to have healthcare. You don't have a choice. Got to have it. It's discretionary stuff you don't really need. They're not buying. Isn't that neat to know? That to me is powerful information as far as making good decisions. Medical and mining, pretty sloppy here. Energy's picking up a little bit. Oil and gas, something to watch going forward. XOP. XRT, the retailer, not doing so good. The consumers pulled in their horns. I showed you a couple of spots where consumers kind of pulled in their horns a little bit. Be careful with retail stocks. Software. Ooh, be careful with software.
That contrast few strong and many fragile is exactly why method matters. Here's the principle to carry into next week. True strength has a clean look, organized price action, controlled pullbacks, and rising volume at meaningful support. Weakness looks loose and emotional, with rallies on light volume and fades on heavier selling. Your edge is separating the two and acting only when conditions match what you want: clean setups, supportive markets, and evidence of accumulation. Everything else is a pass. That discipline protects your capital, sharpens your focus, and keeps you aligned with institutional behavior. Let's apply that filter to the leadership list. The max list shows exactly where strength is holding and where patience still pays.
So now let's look at some of these max list stocks. Apple is owned from lower. I like this base right here. Go across these tops. See how simple that is? See how easy it is to see? We're not the only people in the world that see this. Institutions see this. They use it. That's our edge. We know what they look for. Take out these tops with volume and a good market. That could be a buy on AAPL. AAPU, it's another way to get into Apple, Direxia and Apple. Notice this, $272. Same pattern, just look at the daily chart. It's the same pattern. Take this out right here across these tops. Does 2 million shares a day almost, folks. It's plenty liquid, and it's lower price. It's a way to get in at a cheaper price. To get in Apple at a cheaper price. AAPU. Continue onwards. Amazon. See how this is dropping here? There's really nothing to do with this. Until this shows some power and strength, be cautious. It's, they're selling it. Just leave it alone for right now. Eventually it's going to turn. Maybe it's going to turn on Monday. Why could it turn on Monday? What would be the catalyst here or the setup? This is the 21 EMA, that blue moving average. Get a bounce off of that. That could be a potential setup. Team, I'm going to tell this, and this is for everybody. Institutions use the 50-day. They use the 21 EMA. Some of them use the 8 EMA. I love that 8 EMA. There's a lot of money. There's a lot of research, a lot of experience, and a lot of money in those 3 moving averages. I like the 200 today, but there's too far above the 200 to put on the list. Here we go. AMZU, same situation. There's Amazon. Note the chart. AMZU is basically the same chart. Now, there's a way to get into Amazon, again, at a cheaper price. Amazon, $234. AMZU, $39. There we go. And again, it's plenty liquid. You can get in it. I'm not trying to convince you to do it. I'm just trying to show you at Mission Winners the research we do for investing opportunities to make money. There we go. Let's move on here. Baba's lagging here. Our buy on Baba on the weekly, this is why I love weekly setups. Our buy on Baba was right there. I'll call it, we can just call it 127, 128. 128 up to 190. That's serious money. Then it starts to roll over. We sold into strength and locked in the gains. We're out of it. It's below the 50-day. I'm going to circle back here and say this again. I said this at IBD meetups. If I was wrong, they would have said, don't say that. The things are better above a rising 50-day. That's cold, hard reality. There we go. Opportunity is better. Baidu had a nice base, but now it's faltered back, and it's below the 50-day. Until it shows some power pushing above this line, be careful with Baidu. Google. Google was a good run. Look at the simple bases on the weekly, here and here and here. This base here corresponds with this baseline right there. That was a good move. That was a great move. Now notice this. Comes down to the blue moving average, which is the 21 EMA. Could it get a bounce off of there? You bet it could. It's a MAXLIST stock. It can get a bounce off of here. Notice also, this is the work we do. It gapped down. You see the open hash mark there? It gapped down, it fell, and closed above where it opened and closed above the rising 21-day. It found support on the 21-day with a pickup in volume. That's something to watch going forward. But always remember this. The M in Mission Winners comes first for a reason. The markets. If the markets are bad, we have the discipline to wait. Just wait. Don't force it, in other words. GS, man, that broke out. Look at that. That broke out. That's a good run. Started to fall. We locked it in, and I'm glad we're out. There you go. Leave it alone. Nothing to do with it right now. Continue onward. MasterCard, there's nothing there. Leave it alone. Granite shares. For Meta, there's nothing there. Leave it alone. And then there's Meta Common. We don't have to overthink it. It's way down here. Well, maybe it's going to bottom here. Folks, look at all the overhead supply on the weekly. Stack the deck in your favor. Let's look for strength. There's no strength here at this point in time. So just leave it alone. Move on. Microsoft, no strength, leave it alone. Netflix, no real strength, leave it alone. Nvidia, shop it around. Support on the 50-day. Look at how it bounced off the 50-day on a big pickup in volume. Support on the 50-day right here. Volume was a little bit less, but there is support. But there's something very important, and this is the work we do in Mission Winners. Nvidia has earnings this week. Know that. Buying just before earnings is very aggressive. It's one step to the left of gambling. Be careful with that, all right? I don't do that anyway. Same thing's true with NVDL. Tesla, I think they have earnings coming. This was a nice breakout here, but look what it did. It goes up. How was the volume on that breakout bar? Wasn't that heavy. They weren't voting. Look, and then it rolls right back down with increasing sun. Just stay away from it for right now. It's that simple. Same thing's true with Granite shares. 1.25 times Tesla. Nothing to do with it. Leave it alone. By the way, I want to show this. This will help you. That's Tesla at $400. That's TSL at $16.50. It allows you to get in Tesla basically for a lot less. Oh, and it's plenty fluid. Does heavy volume, folks. 500,000 shares a day. There's nothing really to do with it. Leave it alone. Visa, it's everywhere you don't want to be right now. There's nothing going on with it. Just leave it alone. And then we go back out to the tops with different charts. Anyway, I hope this helps you. Just going in, taking a look at the MAXLIST. I love the MAXLIST stocks. This does, by the way, have clean tops. I stuck it here for a reason. It does have clean tops. I'll show you this as a courtesy. Take these tops out. Key lesson, it gapped down, it fell, and it closed above where it opened. Something to watch with support on the rising 21-day. Anyway, that's the coaching, the education we do at Mission Winners. We don't just give ideas. Oh, do this. Then you're at the mercy of that person. You don't want that. We want to show people what to look for and what to do. Explain it. And then that concept, that investing foundation to make money is yours. You own it.
That wraps up today's episode. Huge thanks to Pat Walker for another deep dive and to all of you for tuning in. If you found this helpful, make sure to subscribe to Mission Winners on YouTube, check out missionwinners.com, and stay sharp out there. Master your strategy, trust the process, and maintain your edge.
The charts will rise, the charts will fall. Don't lose your head, don't risk it all. Every trade's another test. Keep your cool, trust your best. Stay safe out there, keep your line tight. Risk first, always do it right. You don't need luck, just do the math. Be smart, stay true, stay on.